The main investment opportunities within equity markets are still in emerging markets rather than developed markets. Particularly in Asia, we have some of the best risk-return trade-offs that we see amongst all asset classes. Asia ex-Japan equities therefore looking particularly attractive, and within that, North Asian markets such as Korea and Taiwan and China itself rather than the Southeast Asian markets. So there are still plenty of opportunities in equities, plenty of themes to play out, predominantly the growth theme. So Asia is still a region that's very geared to global growth. It's got a rising domestic growth picture from the rebalancing away from manufacturing and investment-led growth, much more towards domestic consumption. There are a number of key themes that investors need to look out for in 2018. The biggest one by far is the development of the US economy and whether the Fed needs to act a lot more assertively than it's doing today in terms of interest rate hikes, or whether we can continue in this Goldilocks scenario where growth is pretty decent, in some cases above trend growth, but inflation is very, very subdued. Our sense is that growth will continue to be relatively strong and that inflation will remain pretty subdued for most of 2018. But we need to remain alert to the possibility of rising inflation, and we need to remain alert to the possibility of the Fed having to be more assertive. So I would say that is really the key theme for investors, probably not just in Asia, but globally. So we've had a very strong 2017. Markets are up in US dollar terms around 30% for most of the Asia Pacific region. So obviously an incredibly strong year at a time when long-term forecasts of return for these markets are actually pretty subdued, somewhere in the sort of mid to high single digits. So it wouldn't be surprising if the market paused for breath here and had a little bit of a consolidation phase. But it's important to emphasize that the market still looks good value, relatively speaking, compared to other equity markets around the world and compared to other asset classes. So there's no fundamental reason why the market shouldn't continue to do well. Fixed income is also an area which has done pretty well this year. Markets have been incredibly active and very vibrant. And again, whilst we remain in this very moderate growth or moderate to strong growth, but with subdued inflation environment, fixed income markets, particularly local currencies here in Asia, should continue to do well also.